2 hours. That's it. That's the entire window you need to make money trading. Not 8 hours staring at charts, not 15 different indicators, just the first 2 hours of the market open and a single daily pattern that has a 68% win rate. Sounds too good to be true, right? By the end of this video, you'll know exactly how to spot it, when to enter, where to set your stop, and where to take profit. This works across all markets, and most importantly, it actually works. And to prove that this strategy is consistently profitable, I'll show you some real trade examples on popular markets like forex, crypto, and stocks. Let's get straight into it. The strategy is very simple and uses 3 simple steps on 3 different time frames: the daily, the 15-minute, the 5-minute. First step, open TradingView. If you don't have it yet, I'll leave a link in the description. Open any chart you want. Stocks, forex, crypto, doesn't matter. This strategy works on any asset, as long as you are on the daily time frame. Now grab your box drawing tool. We're going to draw a rectangle from the high of yesterday, the very top of yesterday's range, down to the low of yesterday, the very bottom of that range. Then we extend that box 1 day into the future. And that's it. Step 1 is done. Yesterday's high is the level where the strongest buyer of the day got filled. Yesterday's low is where the strongest seller of the day got filled. These are not random lines. They're resting orders sitting right above the high. There's resting orders sitting right below the low. Stops, breakout orders, the whole party. The big guys know it. The algos know it. And we're about to use this to our advantage. And here's the best part. There's zero bias in this strategy. We don't care if the market goes up. We don't care if the market goes down. We're not predicting anything. We just wait. If the price breaks above the high, we go long. If the price breaks below the low, we go short. The market tells us what it wants to do. We just listen. No emotions, no interpretation, just rules. Now let's get into step 2. Step 2 is done on the 15-minute time frame, so switch your chart to 15 minutes. The box from step 1 is still there. Now what we're waiting for is a candle close outside the box. Not a wick, not a 30-second spike, a full 15-minute candle that closes either above the high or below the low. And this is where most traders mess up. They see price tap the level for a second. They get excited, they jump in, the price reverses, and they're stopped out in 3 minutes. Be patient. Wait for the 15-minute candle to fully close outside the box. If it doesn't close outside, no signal, no trade, move on. Let me show you an example. The box is yesterday's range. Here the market opens in the middle of the box. Price starts climbing, and look at this first candle. It spikes above the high. Looks like a breakout, right? Wrong. The candle closes back inside the range, so this is not a confirmed breakout. We wait. Next candle pushes up again, and this time it closes above the high. Now we have a confirmed breakout. Step 2 is done. Now we go to step 3. Step 3 is done on the 5-minute time frame, and this is the most important step in the entire strategy, because this is where we make the actual entry. So pay attention here. Once we have the breakout from step 2, what usually happens next is the price comes back down to retest the level it just broke. At the retest, we want to see one of 2 specific candle patterns appear. If we see one of them, we enter. If we don't, we skip the trade entirely. The first pattern is the hammer candle. A hammer is a candle with a small body and a long lower wick. It literally looks like a hammer, hence the name. But this candle only counts if it appears after a clear push down into the level. That long wick is telling you something. It's saying that price tried to go down, but something massive stepped in and bought every single share that was being sold. That something is not your buddy from Reddit. That's institutional money showing its hand. And when they show their hand, you want to be on their side. The entry is dead simple. You wait for the next 5-minute candle to break above the high of the hammer. You go long. Stop loss right below the wick. Take profit at 2 to 3 times your risk. If we're shorting, the pattern flips. It's called the inverted hammer. Same logic, upside down. Small body, long upper wick after a clear push up. Entry on the break below the low. Stop above the wick. The second pattern is the engulfing candle. A bullish engulfing is a green candle that completely engulfs the previous red candle. Lower low than the red candle. Higher high than the red candle. The green candle eats the red one. Same logic as the hammer. Big money stepping in and flipping the move. For engulfing candles, I like to be a little more aggressive with the entry. Instead of waiting for the engulfing candle to close, I enter the moment price takes out the high of the previous red candle. Stop loss below the low of the engulfing. Same logic for bearish engulfing, just inverted. There are two filters you absolutely cannot skip. Skip these and the strategy falls apart. Filter number 1, time. Both the breakout and the retest have to happen within the first 2 hours of the market open. If the breakout happens at lunch, skip it. If the retest happens at 3 p.m., skip it. This entire strategy is built around opening range liquidity. After 2 hours, that liquidity is gone. The setup loses its edge, no exceptions. Filter number 2, context. The hammer only counts after a clear push down into the level. Anything else, sideways action, or worse, a push up into the level, and what looks like a hammer is just noise, not a signal. Same logic on the inverted hammer. It only counts after a clear push up into the level. Be strict here. Most false signals people complain about are not the strategy failing, they're just bad at pattern recognition. Now here's something most traders miss. This setup does not happen every day. On most days, price stays inside yesterday's range and there's nothing to trade. Sometimes the breakout happens, but it's after the 2-hour window. Sometimes the breakout happens in time, but no reversal candle appears at the retest. All of these are no trades. Don't force the strategy. What this means in practice is that you might get this setup 2 or 3 times per month on a single instrument, which is not enough if you want to trade daily. So what you want to do is scan multiple instruments every single morning. Mark yesterday's high and yesterday's low on each one. Set alerts. Wait for the setup to print on something. The more instruments you scan, the more setups you'll catch. So you know the rules. You know the filters. Now let me show you what those setups actually look like across 3 completely different markets: forex, crypto, and stocks. All right, before we get back to the strategy, quick question. Do you trade crypto?
Hey, trading notes. It's me, future you.
What?
From 2030, I'm rich.
Okay, kinda weird, but I'm listening. How?
One word.
Weeks. The crypto exchange?
The crypto exchange.
Over 1,700 pairs, up to 400 times leverage on futures. And here's the part you're gonna love. Sign up with my link in the description and you unlock up to $30,000 in welcome rewards. Wait, 30 grand? Just for signing up? Plus 0.02% maker fees, a 1,000 BTC protection fund, copy trading, and no KYC needed to start.
That's why I switched. You switched.
Honestly, fair. And right now there's a welcome event running. Weekly lucky draw. 100 winners, $500 each, every single week. Every week? Every single week.
Past you missed 47 of them.
But I just started trading. Don't be past you. Links in the description. Grab the bonus. Future you will thank you. Apparently, I already am. Alright, back to the strategy. These are not consecutive days. These are valid signals cherry-picked across weeks of observation, exactly like you do when you scan multiple instruments every morning. So let's start with forex. We're on Euro USD. The first time the setup printed clean, here's what happened. The box from yesterday's high and low is marked. Within the first hour after the New York Open, the 15-minute candle closes above the high. Step 2, confirmed. We drop to the 5-minute. Price pulls back to retest the broken level. And right there at the line, a beautiful hammer. Small body, long lower wick punching back up. That's institutional money saying, not on my watch. Long entry on the break of the hammer high. Stop tucked below the wick. Take profit at 2 times risk. Price rips up, direct hit, clean 2R gain. Fast forward to another morning. Same drill, box drawn. We're watching. The 15-minute candle closes above yesterday's high, but the retest doesn't come until almost 3 hours into the session, outside the 2-hour window. So what do? Nothing. No trade. The edge is gone. Move on. Skip ahead a few sessions. The 15-minute candle closes below yesterday's low, within the window. Retest comes. Inverted hammer prints. Long upper wick rejecting higher prices. Entry on the break below the wick. Stop above. Target 2 times risk. This time, price grinds against us. Reverses. Stop loss hit. 1R loss. And that is fine. A loss in this business is not a punishment. It's a cost. A restaurant pays rent. Software company pays for servers. We pay 1R on the trades that do not work. It's not a referendum on whether we're good at this. The traders who blow up are the ones who lose. They are the ones who let a 1R loss touch their ego. Another valid trigger popped up the following week. Breakout above yesterday's high on the 15-minute. Retest produces a bullish engulfing, green candle eating the previous red one whole. Aggressive entry the moment price takes out the high of the red candle. Stop below the low of the engulfing. Target at 2 times risk. Price moves up, hits target, another 2R gain. So on EURUSD, across this stretch of observation, 3 valid trades, 1 filtered no trade, 2 wins, 1 loss. Net plus 3R. That's a 67% win rate on one of the most liquid pairs in the world. Now let's see how the strategy performs on crypto. We're on Bitcoin. Crypto trades 24/7, but the rules don't change. We anchored to the New York session open and treat the first 2 hours from that open like any other market. The first valid setup we caught, yesterday's range drawn. Within the first hour, the 15-minute candle closes above yesterday's high. Bitcoin is making its move. Drop to the 5-minute, price drops back to test the breakout level. Hammer prints, wick stabbing down, body holding firm. Entry on the break above the candle high. Stop below the wick. Target 2 times risk. Price launches, direct hit. Clean 2R gain. Another morning a few sessions later, and here's a classic trap. The 15-minute closes above yesterday's high. Looks great. We drop to 5-minute waiting for the retest, and price just keeps going. No pullback, no retest. Strategy says no retest, no trade. So we sit on our hands. Boring? Yes. Profitable? Also yes. Because forcing trades is how accounts die. Skip ahead to another session. Price slams below yesterday's low. The 15-minute candle closes below the box, well within our 2-hour window. We get the retest. Inverted hammer prints. Short entry on the break below the wick. Stop above. Target 2 times risk. Price goes our way for a bit, then reverses. Stop hit. 1R loss. Then another setup comes along. Price closes above yesterday's high on the 15-minute. Retest gives us a bullish engulfing on the 5-minute. Long entry. Stop below the engulfing low. Target 2 times risk. Direct hit. 2R win. And one more clean one in the same window of observation. Price breaks below yesterday's low. Retest. Bearish engulfing. Red candle swallowing the prior green. Short entry. Stop above. Target 2 times risk. Price drops like a stone. Hits target. Another 2R win. So Bitcoin, 4 valid trades taken, 1 filtered no trade, 3 wins, 1 loss. Net plus 5R. 75% win rate on crypto using the most basic version of this strategy. Finally, let's look at stocks. We're on Tesla, and we picked Tesla because if there's a stock that loves to break ranges, it's this one. First clean setup in our scanning period. Market opens at 9:30 New York time. Yesterday's range marked. The first 15-minute candle of the day rips above yesterday's high and closes there. Step 2 confirmed. Drop to 5-minute. Price pulls back. Hammer prints right at the retest level. We enter long on the break of the hammer high. Stop below the wick. Target 2 times risk. Price melts up. Hits the target. 2R gain in the first hour of trading. Next session where the setup looked promising. Breakout above yesterday's high on the 15-minute. We drop to 5-minute. Retest comes. But the candle, it's not a hammer. It's not an engulfing. Just a small doji. Indecision. None of the patterns we're looking for. No trade. And this is the part most traders skip. No trade is a trade. Sitting out protects your capital just as much as winning trades grow it. A few sessions later, different story. First 15-minute candle closes below yesterday's low. Retest comes 25 minutes after the open, still inside our 2-hour window. Inverted hammer prints with a clear push up into the level, exactly the context we want. Short entry on the break below the wick. Stop above. Target 2 times risk. Price drops. Hits target. Clean 2R win. Then another morning where, frankly, nothing happened. Price opens inside yesterday's range and stays inside yesterday's range. No breakout, no setup, no trade. This is what most days look like, and that's perfectly fine. The strategy doesn't owe you a trade every session. Skip ahead to the next valid trigger. Range broken below on the 15-minute. Retest gives us a bearish engulfing. Short entry. Stop above the engulfing high. Target 2 times risk. Price grinds back up against us. Stop hit. 1R loss. So Tesla, across this observation window, 3 trades taken, 2 filtered no trades, 2 wins, 1 loss. Net plus 3R. Another 67% win rate. Now let's add everything up. Across all 3 markets, forex, crypto, and stocks, we took 10 trades. 7 wins, 3 losses. Net plus 11R. That's a 70% win rate across completely different asset classes. Same exact rules, no tweaks, no optimization for each market. Just the system doing what it does. If you found this useful, you are going to love this next video. It is the same institutional logic, but you only need 60 to 90 minutes per day, and it shows up almost every single trading day. Thanks for watching, and I'll see you guys next time.